Apparently I said kicks, not nicks. Charles telling me off. He's here for the business as well, though. He's starting with yet another hotly anticipated IPO in the works.
After SpaceX and Anthropic, it's OpenAI's turn to start the process to sell its shares on public markets. The maker of AI chatbot ChatGPT submitted its paperwork to U.S. market authorities, this according to a statement it shared on Monday, without giving any indication on timing. The startup, led by Sam Altman, was founded 10 years ago and basically kicked off or nicked off the generative AI boom when it released ChatGPT in late 2022. It's since more or less become synonymous with AI for the wider public. It's currently valued at $852 billion. This dominant position is made clear when looking at AI chatbot usage. These stats are based on the share of referrals by these chatbots on a large number of websites, and ChatGPT still represents about 79% of those referrals, with Perplexity and Google Gemini far behind at about 7%, Anthropic's Claude just below 3%. But competition is heating up nonetheless by many other metrics, especially as OpenAI has recently reportedly struggled, missing internal revenue and user growth targets, while several key executives have left or stepped back from the company.
Up next, China's exports. They're holding up in spite of the disruption caused by the war in Iran.
The latest customs data for the month of May shows trade growth held up better than expected, thanks in part to surging AI-related exports. Overall, exports rose 19.4% year on year in May compared to 14.1% gain in April. This is higher than what a poll of economists made by Reuters had predicted for May. They'd forecasted 15% growth in exports. Shipments to the U.S. were especially prevalent, soaring nearly 35.4% over the same period. That's the highest growth on that sector since March 2021. That trend towards the U.S. picking up after a long streak of declines caused partly by Donald Trump's tariffs. High-tech exports and integrated circuits played a large part in this, so did the fact that overseas buyers have been rushing in to lock in supplies before energy costs climb higher, as the true impact of the closure of the Strait of Hormuz is still yet to be felt. China indeed holds 15% of the world's global oil stocks and could run through its reserves by late October if forced to use them.
Let's move on to the markets then. How are they looking?
So in Asia, the tech rally bringing shares higher in Japan and especially South Korea. The Kospi index rebounding 8% after a slump on Monday. This follows chip stocks leading the S&P 500 in the U.S. at the close on Monday. The Kospi still heavily weighted in favor of Samsung Electronics, a chip maker, and SK Hynix. Not the same story in Europe at the open, with shares falling across the major bourses, down 0.4% on the FTSE in London.
Now next, a number of French media outlets have got their hands on a draft report concerning the country's pension system. It's likely to cause a pretty significant political stir, this.
The annual report of France's Pensions Advisory Council is due to be submitted for debate by the full council later this week, ahead of its publication. The draft, though, already making waves. It proposes pushing the country's retirement age to 67.6 as a demographic shift is draining the system's funds faster than predicted. Brian Quinn and our colleagues at France Télévisions have the details.
With less than a year to go before presidential elections in France, a bombshell report is nearing publication, one that recommends pushing the country's retirement age past 67 years old. The proposal eliciting mixed reactions from the public.
We need to work to produce more, so I think working years need to be extended significantly.
Our parents are already spent by the end of their careers. I think we all deserve to retire earlier.
France's retirement age is currently set at 62 years and 9 months. To keep its books balanced, the Pensions Advisory Council says that should be pushed to 64 years and 4 months by 2030, 65 years and 8 months by 2045, and 67.5 years by 2070. The proposal stems from revised deficit estimates. Last year's report projected a pension deficit of 1.4% of GDP by 2070. That's now been raised to 2.4%. The main cause? France's birth rates are on the decline, from 1.8 child per woman previously to just over 1.4 now. a phenomenon that will leave the country with an aging population.
When fertility rates drop, it means there will be fewer workers in the future to support the pension system than expected.
Other proposals to help balance the books include higher social charges for current workers and lower pensions for future retirees. The Advisory Council is set to meet in full on Thursday. Its draft report notes that while deficits are due to grow, the system is not on a path of spending that will lead to its collapse.
Charles, thanks very much. Charles Pellegrin with Business for us. Straight to Dipti.